There's a line in the glass section of a lot of UK car insurance policy booklets that most owners never read until the worst possible moment. It says that broken glass in the windscreen and windows is covered, and then, a few words later, it takes it back for anything overhead. One major insurer's wording is about as blunt as it gets. Broken glass in the windscreens or windows is covered. Sunroofs or any other glass forming part of your car, including panoramic roofs, is not. Another spells it out further. No sunroofs, no panoramic roofs where the roof glass is a separate unit from the windscreen, and no roof structure. So the single largest piece of glass on a modern car, the one fitted to what feels like every other new SUV on the forecourt, sits outside the cheap, no-fault, no-excess bit of your policy that exists specifically for glass. That's how this actually works. Nobody sends you a letter saying we have decided not to cover your glass roof. There's no announcement. It happens in the booklet, in the quote engine, that returns no price at all for your postcode, and in the renewal that turns up with conditions attached that weren't there last year. Quiet, legal, and entirely one-directional, every one of those sentences was written by somebody whose job was to reduce their exposure, not yours. I've had headliners out of enough cars to know that a glass roof isn't a window. It's a structural panel with a motor, a blind, a bonded frame, and 2 drain hoses. And I read policy booklets the way I read a workshop manual, because I've had to argue with them, not because I sell them. That's worth saying up front. I'm not a broker and I'm not an underwriter, so on the pricing side, there are people who know far more than I do, and I'll flag it when we get to their territory. Here's what you're getting. 10 features fitted to ordinary new cars in this country right now, and what the industry is actually doing about each one. The exact wording, the real numbers, the bit that lands on you. Then a procedure at the end you can run on your own car tonight in about 20 minutes, with your own paperwork, on your own numbers. And one of these is a clause that's already been law since 2018, sitting quietly in a statute that lets an insurer walk away from a claim because of something you didn't tap on a touchscreen. The second half of 2027 is when it stops being theoretical. That's number 10, and it's the one I'd stay for. The thread running through all of this is simple, and it's worth holding on to as we go. Take any part of a car that used to be simple and cheap to put right, a bulb, a bit of glass, a bumper, and follow what happened to it. It became sealed, integrated, calibrated, coded, subscribed. The parts got better. The risk of them got worse. And every time that risk went up, somebody had to carry it. It wasn't the manufacturer and it wasn't the insurer. Both of them got a sentence written on their behalf. 10 of them, starting with the one over your head. Number 1, the panoramic glass roof. Here's why it stings. The whole point of the glass section of a policy is that it's the gentle bit, repair or replace the glass. And claiming under that section doesn't touch your no claims discount. Chip repairs are often free. Replacements usually carry a fixed glass excess of somewhere between £75 and £150. Now, push the roof out of that section and watch what happens to the same breakage. It's still covered under comprehensive. It just becomes an ordinary damage claim, so you pay the full excess, compulsory and voluntary together, which for one owner meant £345 instead of an £85 glass excess. And a full claim can step back your no claims discount in a way a glass claim generally doesn't. Same cracked pane, different paragraph, 4 times the cash and a mark on your record. Not every insurer does it. Some cover the roof under glass with no exclusion at all, which is exactly why this is worth checking rather than assuming. My read on why the exclusions spread is straightforward risk arithmetic rather than malice. Roof glass on a car with a fixed panoramic panel is a bonded assembly. It usually goes to a body shop rather than a mobile fitter, and it's 4 figures. Put that in the same low excess bucket as a windscreen, and the bucket stops working. So it got moved. Nobody had to tell you because you agreed to the booklet. Number 2, keyless entry and start. And this is the one where refusal has been open and documented for years. According to DVLA figures, Range Rovers were the second most stolen car in the UK in 2022, with more than 5,200 taken. And faced with the claims, many insurers either stopped covering them or put premiums up sharply. Land Rover itself stopped offering insurance for its own models on the 1st of November 2022. Read that twice. The manufacturer couldn't get its own cars covered. The numbers owners were seeing were not marginal. One London owner with a plug-in Range Rover on order found his existing insurer wouldn't cover it, and another quoted £6,000. And a London broker described a quote of £38,000 on a car worth £50,000. That is not a price. That's a refusal wearing a number. And one specialist underwriter put the street-parked position about as plainly as it can be put. Even with the most sophisticated tracker, 9 out of 10 insurers would say no. Now, the fair objection, and it's a real one. The maker's answer at the time was that its newest cars weren't the problem. JLR said just 9 new-shape Range Rovers had been stolen out of 12,200 sold. Fine, both things are true. The thieves were mostly taking the previous generations, and the insurers were pricing the badge and the postcode rather than the specific car in your driveway, because that's what they do. Which is precisely the trap. You can buy the fixed version and still be quoted as though you bought the broken one. What it's turned into is a condition. Installers report that through 2026, owners of certain models have been getting renewals that only stand up if specific aftermarket security goes on the car, and that the demand is now for 2 layers, immobilization to stop it moving and tracking to get it back. Treat that as trade-side reporting rather than a published rule, because it varies by insurer, but the shape of it is consistent and it's spreading well beyond one brand. And the reason it's spreading is on the ABI's own ledger. The average claim for theft of and from a vehicle reached $11,300, and theft claims ran to 142 million in a single quarter. A relay attack costs a criminal a few £100 in kit and takes under a minute. That's the trade the industry is looking at. One honest caveat, because I see this recommended as a cure, and it isn't. A signal blocking pouch is a good habit, and it costs almost nothing. But it only works when the key is in it, every single time, including the spare that's been in a kitchen drawer since 2019. It's a discipline, not a fix. The fix was supposed to be designed in. Number 3, the battery under the floor. Not the range, not the charging. The flat slab of high voltage cells that is also, structurally, the lowest part of the car. High voltage batteries can account for up to 40% of a vehicle's total value, and even minor collision damage can lead to a total loss decision, particularly as the car depreciates. That's the whole problem in one sentence, and it's Thatcham's sentence, not a broker's. Follow the mechanism, because it's not what people assume. It isn't usually the cells, it's the casing and the mounting. Clout a high curb, catch a lump of motorway debris, drop into one of the potholes we've all learned the shape of, and you dent or crack the pack housing. Even when the damage is limited to the casing or a mounting bracket, current repair protocols often mandate replacing the entire battery. Thatcham's own worked example is a 3-year-old EV with minor side impact damage to a battery bracket, where the mandated procedure ends in a write-off because the casing damage calls for a new pack that costs more than the car. And nobody can easily prove otherwise, which is the quiet part. The industry's engineering research side has been blunt that the diagnostics available after a crash don't really tell you the state of the pack. In the absence of that data, the safe decision and the expensive decision are the same decision, so that's the decision that gets made. There's a figure doing the rounds that more than 1 in 5 accident-damaged EVs get written off. I'm not using it. It appears on broker marketing pages without a traceable source, and Thatcham doesn't publish it in that form. The conservative sourced version is enough. Too many repairable cars are being scrapped for casing damage. The industry knows it, and in March 2026, Thatcham published an EV blueprint setting out 8 requirements: accessible diagnostics, proper underbody shields, repair methods for casings and brackets that don't need the pack stripped out, aimed squarely at stopping 3-year-old EVs being written off unnecessarily. Some of it is already moving. As body shops have got more experienced with the technology, EV repair costs have come down by around 10.7%. Good, but read what the blueprint is. It's a request. 8 things the people who design and build these cars are being asked to please start doing, which tells you they weren't doing them, and the bill for that has been landing on owners and on every premium in the pool for years. Number 4. The camera behind your windscreen. A stone chip used to be a bloke in a van. 40 minutes on your drive, done. Now the glass is a mounting bracket for the forward camera that runs lane keeping, emergency braking and adaptive cruise aimed to a fraction of a degree, and replacing the glass moves it. So the job has 2 halves, and the second half can't be done on a driveway. It needs a level floor, controlled lighting, and targets set at measured distances. What that does to the money? Windscreen replacement in this country now runs from a bit over £100 to well above £2,000 depending on what's living in the glass, and calibration on top of it is a fixed £199 across one accredited national network, with wide variation elsewhere depending on how many systems have to be reset. Here's the part in the wording. Cover for the recalibration is often tied to using their repairer, not yours. One policy covers recalibration of the sensors associated with the windscreen when you use an approved repairer, and limits cover to £150 after excess if you choose your own supplier. On an ADAS car, £150 might not even cover the calibration, never mind the glass. The choice of fitter used to be yours, and it barely mattered. Now, it's the difference between a claim and a contribution. 2 things worth knowing while you're in there. Chips are still often repaired free with no excess, and a repair beats a replacement every time on an ADAS car. So don't sit on a chip for 3 weeks. And if aftermarket glass goes in and the calibration won't hold, the fix is manufacturer glass under the same claim, with the maker's position statement as the document to cite. Say that sentence to a claims handler and watch the conversation change. The reason this has gone from niche to everybody's problem is in the ABI's numbers. The average accidental damage claim rose to $3,699, up 8% in a single quarter. And the ABI attributes it to modern components like integrated sensors and cameras, making the work more specialized, slower, and dearer. Number 5. The sealed headlight. This is the one that catches people out 3 owners down the line. A base Volkswagen Polo used halogen bulbs at £18. The high-spec version came with sealed LED units at more than £800 each. Same car, same shell, different trim badge, 45 times the part cost. A trade-supplied LED unit for an Audi A3 came in at $745.86, and an approved unit for an A8 at $2,602.09. You can't get inside them. Sealed LED headlamps are designed as integrated systems and are not built to be opened or repaired. No bulb, no bracket, no fiddling. The whole assembly, plus removing the bumper on plenty of cars, plus coding on some. And here's the bit that becomes an insurance problem rather than a repair problem. On an older car, a big enough lighting bill can make the repair uneconomic and write the car off entirely, not crash damage. Lights. The advice from the people who costed it was to avoid the trim levels with sealed units if you're buying used or planning to keep the car a long time, and I think that's exactly right, which is a strange thing to have to say about better headlights. because they are better. Matrix lighting that dips around oncoming traffic, pixel by pixel, is genuinely superb engineering. It's just been sold to you as a feature and handed to you as a liability. Right? Halfway through the 10, and if you've got this far, you're the kind of person who reads the booklet, so subscribe and I'll keep pulling these apart. 5 to go, and the next one is a feature you pay monthly. For that transfers precisely none of the responsibility you think it does. Number 6, hands-free driving. Ford's Blue Cruise comes with 90 days free, then it's $17.99 a month, or $2 for 15 tunes a year. It's a level 2 system, permitted on pre-mapped stretches of motorway. Hands off the wheel, eyes on the road, camera watching your face. And on the insurance question, Ford's own UK managing director said it straight when it launched. The driver remains fully responsible in insurance claims because this isn't autonomous driving and the driver is always in control. So you're renting the convenience and keeping the entire liability. Whatever you're buying there, it isn't cover. Number 7, everything you paid extra for, at the moment, it's worth something. This is the item I'd tattoo on the inside of a new car buyer's wrist. You spec the glass roof, the matrix lights, the big alloys, the upgraded audio, the driver assistance pack. 3 years later, somebody writes the car off. What do those options add to the settlement? Broadly, nothing. The Financial Ombudsman's own guidance says a lot of modifications and optional extras won't have much effect on the second-hand value compared with valuation guide prices, and notes that where an accessory genuinely does add value, those cars are usually insured on an agreed value policy that has already accounted for it. Which is the hint hiding in plain sight. If the extras matter to you, agreed value is the mechanism, and hardly anybody with an ordinary family car is ever offered it. Then there's what happens to the base figure. The FCA's review found some insurers had been offering policyholders less than their written-off or stolen vehicles were worth, with settlement figures sometimes only increased after a complaint was raised. The regulator also warned that dragging out repeat valuations can wear customers down until they stop challenging, and told firms not to discourage disputes. Now, since you've stayed this long, here's the single most useful line in this entire script, and it's yours. Where trade valuation guides are used, the Ombudsman expects an insurer to use all of the available ones at Cap, Glasses, Auto Trader, and Picasso. Not the one that came back lowest. All of them. Ask which guides were used. Ask for the figures from each, and ask in writing. That question alone has moved a lot of offers. Number 8, the badge nobody has claims data for yet. This is the newest wrinkle, and it's biting people who are doing the sensible thing and buying a cheaper car. Research by a car sales platform put the average insurance cost for a JQ7 at $1,103 a year, against 5% for a Skoda Karoq used as a petrol equivalent. On the Xpeng G6, only 2 insurers on their panel would quote at all, averaging $936 a year against $639 for a petrol Hyundai Kona. The stated reasons are boring and real. Limited claims experience, developing parts, supply networks, open questions about battery repairability and write-off rates, all feeding repair cost and repair time. One analyst described it as chicken and egg. Too few policies sold to build the data needed to price the risk, and with a short panel of insurers willing to quote, you lose the one lever you actually have, which is shopping around. Save $4,000 at the dealership, hand a chunk of it back annually, and never get told at the point of sale. Number 9, the modification you didn't know you'd made. Every insurer expects you to declare changes from factory specification, and the list is broader than people think. Performance work, cosmetic work, wheels, wraps, audio, and yes, security additions like trackers and immobilizers, the very things another insurer may have demanded you fit. Declare them anyway. It usually helps, and undeclared it can hurt. Two traps in here. First, it isn't limited to what you did. You're responsible for declaring every modification on the car, regardless of who fitted it. So, the remap the last owner paid for and never mentioned is now your non-disclosure. Second, the consequence isn't a slap on the wrist. Where an insurer believes information was deliberately withheld, it can treat the policy as though it never existed, which means your own repairs, their outlay on the other party, and a driving without insurance problem on top. And it does happen at claim time on theft, not just on crashes. The Ombudsman has flagged declined claims after a vehicle was modified in ways that made it more attractive to thieves, alongside a rise in theft by deception, including the trick where a supposed buyer swaps your key for a similar one on a test drive and comes back later for the car. If you're selling privately, that one's worth 10 seconds of paranoia. Number 10, the automated feature. And the moment control comes back. The government has said it will implement self-driving vehicle legislation in the second half of 2027, with the full framework expected to be enforced then, and the passenger service permitting part arriving earlier to support the first commercial robo-taxi-style services. A driverless taxi pilot has already been running in London with a full public service planned. Here's the structure, because it's better than people assume and worse in one specific place. Where an authorized self-driving feature is engaged, the user in charge isn't responsible for how the vehicle drives, and the insurer pays out to victims in the first instance under the Automated and Electric Vehicles Act 2018. That's the promise, and it's a decent one. No arguing about whether you or the software was steering, the claim gets paid. Now read Section 4 of that same Act. Because this is where the sentence sits, and it has been sitting there in force since 2018, waiting for the cars to arrive. An insurance policy covering an automated vehicle may exclude or limit the insurer's liability for damage suffered by an insured person arising from an accident occurring as a direct result of software alterations made by the insured person, or with their knowledge that are prohibited under the policy, or a failure to install safety-critical software updates that the insured person knows or ought reasonably to know are safety-critical. Ought reasonably to know. Hold that phrase up to the light. Here's what they told you. Self-driving is safer. The liability shifts off you and onto the machine. The insurer picks it up, and the whole messy question of who was at fault gets solved by statute. Every word of that has been said out loud by ministers, by manufacturers, by the industry's own communications people for the best part of a decade. And the vast majority of the time it will be true. Here is what's actually true. The cover you were promised is conditional on you maintaining a piece of software you cannot inspect, cannot audit, and did not write to a standard defined by the company that wrote it. A notification appears on the screen in the middle of your dashboard. It says an update is available. It does not say, and there is no requirement anywhere that it must say, this one is safety critical. And declining, it moves the financial consequences of a collision from us to you. You tap not now, because you're parked outside a school and you've got 90 seconds, and the last update took 40 minutes and moved the climate controls. 3 weeks later, something goes wrong on a slip road while the system is driving. And the argument you are now in is not about whether you drove badly. You weren't driving. It's about whether you ought reasonably to have known. Follow the money on that, because it's not complicated and it's not a conspiracy. Somebody in a room worked out that if a manufacturer ships a bug and a car crashes, that's a product liability claim against the manufacturer, and those are enormous. And somebody else worked out that if the fix for that bug was sitting on the car's screen for 3 weeks, and the owner kept pressing later, then a chunk of that exposure can be routed away from the people who wrote the defective code and towards the person who owns the car. It's a sentence in a statute and a matching sentence in a policy document. That's the whole mechanism. Nobody had to be villainous. They just had to be in the room when the drafting was done, and you weren't. You will not be in that room for the policy wordings either, and those are being written now, ahead of the second half of 2027, which is why this is worth carrying with you rather than filing under future problem. The defence is boring, and it is completely within your control. When your car offers an update, you take it, and you take it promptly, and if there's any question later, you can show when you took it. Not because I think the software is dangerous, because the clause that decides who pays doesn't ask whether the software was dangerous. It asks what you did about the notification. They've told you the machine takes the responsibility. What the machine takes is the steering. The responsibility gets handed back to you the moment you decline a download. There's something worth sitting with underneath all 10 of these, and it isn't a complaint about the modern car. Most of this technology is genuinely superb. Matrix headlights are better than anything I grew up with. Automatic emergency braking stops crashes that used to kill people. I'm not standing here pining for drum brakes and a choke, but there's a skill that's quietly gone missing. And it's the one worth getting back, not the ability to fix things. Plenty of this can't be fixed by anyone in a driveway, and pretending otherwise helps nobody. The skill is judgment. Knowing before you sign what a thing costs to own rather than what it costs to buy. Knowing which of the boxes you tick on the options list is a pleasure, and which one is a bill with a delay on it. Knowing that the words on the brochure and the words in the booklet describe the same car in two completely different languages, and that only one of those documents gets read out when something goes wrong. That used to be knowledge you inherited. Somebody who'd owned 3 of them told you which trim to avoid. Now, the useful knowledge is spread across a policy wording, a manufacturer position statement, an ombudsman decision, and a Thatcham blueprint, and none of those are handed to you at the point where the decision gets made. So you go and get them. That's it. That's the whole discipline. The people writing these sentences are not smarter than you. They've just read theirs, and you haven't read yours. Right? Here's the procedure. 20 minutes tonight, with your own documents and your own car. Open your policy booklet, not the certificate, and find the glass section. Search it for the words sunroof, panoramic and roof. Note whether roof glass is in or out, and note your glass excess against your standard excess. That's step 1, and it takes 4 minutes. Step 2, same booklet, search for recalibration or ADAS. Find out whether recalibration is covered in full only through their approved repairer, and what the cap is if you use your own. Write the number down. Step 3, list every option on your car that is not standard on the base model, and accept now that they are worth approximately nothing at settlement. If any of them genuinely matter, a genuinely valuable car, a restoration, something rare, that is what an agreed value policy exists for, and it is the only mechanism that fixes it. Step 4, write down every modification and every addition, including anything a previous owner did, and including any tracker or immobilizer, and ring your insurer to confirm all of it is on the record, not email. Ring, then ask them to confirm in writing. Step 5, if you're shopping for a car rather than insuring one, get a quote before you buy, not after. On an unfamiliar badge, count how many insurers will actually quote at all. If it's 2, that tells you more than the review did. And here's what a total loss offer looks like once you've done all that. You ask which valuation guides were used. You ask for the figure from each of CAPE, Glasses, Autotrader and Picasso. You ask in writing. If they used one, you say so, and you say the Ombudsman expects all of them. That's not a threat, and it's not a legal argument. It's a question a well-informed customer asks, and the answer changes the number often enough to be worth the stamp. The bill that never turns up is the best kind. Somewhere down the line, there's a claim you settle for what the car was actually worth instead of 900 quid under, and you'll never know precisely which of these 5 steps did it. That's fine. That's what this stuff is for. Now, I want to hear from the people who have already been through it. Not opinions. What actually happened? If you've had a panoramic roof go, and been told which section it falls under, tell me which insurer and which answer you got, because that varies far more than it should, and a list built by owners is more used than any comparison site. Same if you've had a windscreen calibration argument or a settlement figure moved after you pushed. And if you're a broker or an underwriter and I've simplified something on the pricing side that deserves better, I said at the start that's where I'm weakest. So come and correct it properly and I'll take it on the chin in the next one. I read every reply on these, and the ones with the specific numbers in them are the ones I go back to. There's a thread here I deliberately didn't pull tonight, and it's been nagging at me for months. The conditions sitting under all of it. How a car's repairability, or the lack of it, is decided years before the car reaches you, by people who are not paid to think about the repair at all. There's more in that than I could fit here, and I'm still digging. Subscribe if you'd like to be there when I've got it straight. Read your booklet. It's the cheapest 20 minutes you'll ever spend on your car.